a disappointing session thanks to Infosys, which kick-started the day with disappointment. Having said that, there were other factors as well at play. The IIP data, even though it was better than the market expectations, that didn't quite cheer the market and completely failed at that. And then, of course, we were not alone. It was a global bout of weakness that you saw. Asia as well as Europe were trading well in the red. So we were not alone in the weakness bout today. Lots to chat about. Of course, two of our experts join in for more on the take on the markets. Ashwini Gujral on the technicals, and of course Varun Goel from Karvy as well to talk about the fundamentals of the market. Quickly then walk you through how the session panned out. It's been a close below the 5250 mark. Remember, we've been latching onto that 5300 range up until now, but today that got taken in trade. And it's more disappointing because the selling today has come in on the back of high volumes. We've almost done 1.6 lakh crore rupees to the total participation figures, 1.5 lakh crores coming in from the futures and options side. Like I said, IT, that was the biggest I saw in trade today. Infosys dragged down the entire sector with it. The CNX IT futures knocked off almost 5% intraday, and of course Infosys cracked its 200 DMA as well. In fact, at one point in time the counter was staring down a good 10%, finally settling in down about 8.5%, and that really took down with it the entire IT basket. So be it TCS, Wipro, HCL Technologies, you had the likes of the mid-cap IT basket as well, the likes of an Hexaware, even for that matter, Geometric Software. All these counters shaved off significant amount of wealth. Not just that, some other weakness coming in by way of Axis Bank, which is slated to come out with its earnings on Tuesday next week. You had HDFC, Tata Motors, Bharti, L&T, Siemens, as well as Sesagoa, which were the laggards. The only pocket of strength today was perhaps the entire oil and gas pack. So yes, Kane held out for itself. You had GAIL, BPCL, and then of course there were high beta trades like a JP Associates, which actually looked good. The market breadth, while it closed in favoring the declines, there was marginal outperformance coming in from the broader markets, with the small cap index shaving off about 0.7%. Lots of pockets of strength. It was the entire sugar pocket, which was the sweet pocket in today's trade, and the entire UB group of stocks held out very well. So be it United Breweries, UB Holdings, United Spirits, even Mangalore Chemicals did pretty okay in trade, as was the case with CMC, Karnataka Bank, as well as Onmobile Global. Lots to chat about. Let's quickly then bring in our experts on board. First, Ashwini, to you, a crack below 5250 on the back of high volumes. What's the ticker indicating?
Often falls come in on high volume, so that's not too much of a surprise, and it was triggered by an event. The main aspect here is that 5180 to about 5200 needs to be held on, and as long as that is held on, this would be a dip where people can buy into this dip, and the next leg of the rally may resume from these levels. If I have to choose between Bank Nifty and Nifty, Bank Nifty obviously is a stronger index, and that would be my index of choice if I have to participate for the next few days till we have clarity on results, monsoon, policy action. We should be in this 52 to 5400 type of band, and only beyond that we'll be able to take a view of the exact direction that the market will take. So around 5200 you should buy, and try to sell around 5350, 5400. Now as I speak, TCS results are out and they have beaten the street. So chances are you get again a rally above 5300, and that would be used to book profits on positions that were taken today.
Varun, what is your sense on how the market is shaping up? Because barring any fundamental move, it seems like the market is just about holding around, maintaining that trading range in anticipation of some policy reforms post the presidential elections.
Well, I think valuations definitely remain supportive for the market. I think we are trading at almost 13 times 1 year forward earnings, which is a significant discount to the 10-year average. I think what market is looking for some kind of positive trigger. We're already seeing the situation in Europe and the rest of the world kind of easing. There has been a significant amount of monetary easing which has happened in China, in Europe, today in Korea. And our own sense is that when RBI meets towards the end of this month, we should also see some kind of monetary easing happening in India also. Other than that, of course, the diesel price deregulation remains a very significant set of reform which is expected. We do hope that once the presidential elections are done, we are going to see some marginal increase in diesel prices. Other than that, of course, the result season has started off well, Infosys being the only exception. Other than that, we believe that the earnings would be broadly in line. We're expecting almost a 10% kind of earnings growth. So I think once this earnings season is kind of unravels and the earnings are more or less in line with expectations, some kind of skepticism about the Indian growth story will go away, and we will soon see markets resuming the uptrends.
Ashwini, first your take on Infy as well as TCS. For Infy, is there more pain to go, and can we expect a pop or a green shade at least on TCS tomorrow morning?
See, it's clear that the sector is an underperformer. So as a trader, if I have a choice of several sectors, I have the liberty of not choosing the tech sector. Now, Infosys, this is the second 10% down move it's had, because of results. Now, finally, what is going to happen is that slowly, or maybe tomorrow, it will go through this 2150, 2200 type of zone, and probably move towards 1650, 1700. In case it does not do that and consolidates and continues to move sideways, then maybe it's bottoming out, because even worse news has not allowed the stock to go through 2150. So we need to watch out the next few days whether the previous bottom made in the last quarter, that gets taken out, or does it survive. Now, even if TCS has come out with good results, it remains to be seen whether it can take out 1300. If it can do that, then we are really opening up 100, 150 points on the upside on TCS, and maybe the valuation gap will increase. But if they are also cautious in terms of commentary, etc., and 1300 does not get broken, then we'll probably stay between 1200 and 1300 on TCS. Overall, from a trading point of view, the sector is not inspiring confidence at all.
Varun, is that your view as well? And how have you read into the inline set of numbers that TCS has declared?
I think as far as this earnings season is concerned, we believe that the earning growth will be led by banking and IT. I think IT as a whole should be doing okay. We are expecting a 10 to 15% kind of upside from the sector as a whole for the rest of the year. Of course, one has to be very, very selective. I think what we saw today between the two results which came out is that the quality of management makes a significant difference to the prospects of any particular company. What we are seeing is that whenever promoters find it difficult to run a particular company and are hesitant to get in professional help, the company always suffers and the minority shareholders always suffer, which is clearly the case with one of the leaders today. I think one has to be very, very selective. One has to go with companies which have demonstrated volume growth while keeping their margins intact. So I think IT as a story, especially because of the significant depreciation in rupees, still continue to look good. We are going to see very good earnings growth from a relative perspective. For FY13, IT is going to be a significant contributor to Sensex earnings in FY13, and we believe that this is one sector that we will definitely like to hold for the rest of the year.
Ashwini, before we move forward, a quick chart check on HDFC Bank.
Well, HDFC Bank is at new highs, so chances are that post a correction could get down to 545, 550, and then should get towards new highs again. Chances are this time it could reach towards levels of about 620, but overall it's a buy on decline type of stock. This is probably the first stock you'll buy as the market turns.
Varun, you said that banking this time around could surprise the street by way of Q1 earnings. What is it that you like out of the sector?
I think Tier 1 private sector banking names definitely look good. We are expecting a 15 to 20% earnings growth for this space as a whole, and there will be definitely be companies which will do better than that. I think the good thing is that the asset quality concerns are now behind us. We don't expect asset qualities to really deteriorate from these levels. I think as the interest rate cycle kind of comes down and we see interest rates coming down in the economy, we would see some kind of margin expansion also, although that will get reflected from next quarter onwards. So I think net-net, we believe that for this year as a whole, banking, especially the private sector banking names, will contribute very, very significantly to Sensex earnings, and we would definitely prefer private sector versus the public sector.
Okay, the one pocket which could be active tomorrow is telecom. Post the EGOM meet, certain takeaways which augur well for the telecom space, and that being that spectrum can now be treated as a tangible asset, and it is going to be available as a security to lenders, and lenders will have the right to auction spectrum as well. The guidelines of the auction, of course, are going to be decided in the next EGOM. Varun, your take on the telecom space, considering it's still a very much developing story, would you approach or rather adopt a wait-and-watch approach?
Well, I think most of the negatives are already in the price. I think there is a lot of regulatory uncertainty in the space. People have assumed the worst. There is a lot of concern about what will be the final price of spectrum. The government seems to be differing in terms of whether to go ahead with the auction or whether to come up with any alternate methodology to figure out the right price. But I think as far as the sector is concerned, we've already seen the worst. There is already consolidation which is beginning to happen. I think very soon we will see pricing power return to the industry. And I think as far as the stock prices of most of these companies are concerned, we've already seen the worst, and we would expect the space as a whole to do well over the rest of the year.
Ashwini, what is your take on Bharti at 306? Is it a good buying point, or would you just sit on the sidelines and wait for the news flow to actually come in?
You need to avoid stocks with problems. So you keep away from things like Infosys, Bharti, etc. You stay with things like HDFC Bank, who have no controversies, no issues with their growth. So that's another avoidable stock. Maybe if you have to insist on buying on Bharti, if it gets to 290, 295 for some reason, probably buy it there and make your 30 bucks and be out of it.